Good morning, everyone. It is Thursday, November 4th. This is Morning Market Movers, where we look at hot spots in the markets for today and we do some live analysis for day trading, looking at potential opportunities. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, we've got Brian Caprice. Before Brian and I jump into hot spots in the markets for today, and there clearly are some, we do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational section. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes only. Now let's take a peek. I did just, by the way, want to remind you, because today we are going to be talking about FX. And if you'd like to learn more about foreign exchange trading, FX trading, there is a great event happening next Tuesday. IG is running it. It is free. That's the registration link. Please register for the IG Forex Trading Summit. We've got a variety of speakers. Brian will be speaking. We've got people speaking on the basics of FX. We got somebody else speaking about the psychology of trading and how they like to analyze the markets. We've got uh, we've got some great content for you to catch, and so please, and I know there's going to be some giveaways, so please register for the event. And if for some reason you're not able to make it, it will get recorded and IG will share those recordings. So please check out that Trading Summit link and join us. Now, what are we looking at today in the markets for the hotspots? Number one, and I've got this chart up there, the Bank of England surprised everyone a little bit. Now, we know that tapering is coming on bond purchases, but the markets had actually priced in the Bank of England raising interest rates 15 basis points. They had expected uh, the Bank of England to be one of the first to join the raise interest rates. They chose to do nothing. They're holding interest rates steady. With that move, the pound got hammered. You can see that move right here a little bit. We also see it over in the yen. We're going to look at what's going on with the pound and its immediate weakness because the Bank of England didn't change their interest rates, and that was just clearly a little bit ago. Uh, we'll then take a look over at energies, oil climbing higher. It had gotten down to $80 a barrel, and overnight it's right back up. So we're going to take a look at what's going on over in oil, and because the natural gas inventory report is later this morning at 10:30 a.m. We'll probably take a quick peek over at nat gas, and then lastly, I want to remind everyone tomorrow before we go on, so these are going to be some big numbers that are going to really impact. Might start forcing hands. We keep talking about it, but the non-farm payrolls and the U.S. unemployment rate are going to come out right before we do this episode tomorrow morning. So you'll have to be on the lookout for that. I'll drop a link in where you could find uh, those those numbers where they'll come out. So Brian, I'm actually going to flip it over to you, and let's start with the pound. Then we'll go to energy, and then let everyone get ready for the open. It's going to be an interesting day.
Yeah, I mean, I think first start off with the FOMC yesterday. I mean, the pound is a big deal, but it's the same story three times this week. Australia disappointed, it crashed. Yesterday, the dollar disappointed, it crashed. Pound disappointed this morning, it crashed. So it'll probably stabilize at this point. It's the same thing. The market is in belief that things are much better than expected. The pound is not the first to raise. New Zealand has already raised. They were the first of the major nations to do it, as far as like the big eight. Um, right now it's kind of one of those things based off of everything we've seen. You say, like, why is the market disappointed? Well, the market kind of, again, analyzes the data, sees where we are, uses historical kind of trends of when they're raising, when they're not raising, looking at other implications. That's where these forecasts come from. It's kind of one of those things. There's a reason why you don't want to raise your country's your exchange rate. One, because again, right now it's all about rebuilding back your economy. Making your currency more expensive actually hurts your companies. Okay, a raising interest rate environment is also bad for your overall kind of stock market in general because of lending purposes, but also because of the currency play on it. where the pound is right now, and again, the pound is a little bit more sensitive to it. This is one of those cases where I was not actually surprised that the pound did not raise anything. The market believed it should have done it, but based off of everything, this is a post-Brexit, scenario. Yesterday we heard things that France was like, oh, they're going to abide by it. Not necessarily surprised. So the market was surprised. I wasn't on this one. But again, we've talked about how currencies is a big thing when we talk about interest rates. 121 points down in 24 hours in the pound dollar is a lot, especially after we saw the dollar weakness play in there. What I mean by that is this big drop right here was the dollar yesterday, heading straight down. Oops, let me change this off blue so you guys can see it. That was the dollar drop. So, and you can see the dollar retracing the big drop that we had yesterday. So this is kind of, the same kind of assumption of what I see here. Yesterday we saw this one rise up, and then today we saw it rise back down. Not rise back down, but fall back down again as the dollar regained its strength. Now, is it the end of the pound? No. It just basically it's a perceived kind of strength that was supposed to be there that is not now. Does it change anything on a fundamental basis? No, not really. What it will do is probably, in the near term at least, provide most likely increased profits in their companies, so things will look a little bit better in the next quarter because they've kept things low. But what I'd say the trading opportunity today is to probably find the bottom, look for a failure to go lower, and then look for a retracement back higher inside of the pound. So we know right now. Sorry, guys, I keep clearing the throat. I don't know if I told you guys the baby.
It's like allergies are kicking up. I mean, everything. Yeah. It's that time of year. I'm struggling over here myself.
Yeah, they were both sick, and then Dad held on for 4 days, and now Dad's getting it. So,
oh no.
Anyway, yeah, it's it is what it is. I was doing. The girl slept right on my face. I was like, yeah, I'm gonna get it. So, not COVID. They're both tested, and they're fine. So
but she's your daughter, sickness. And you're gonna do that to comfort her.
Yeah. Normal sickness, guys. They exist still. There are normal viruses and things like that out there. They still exist. Yeah, the common cold was not eradicated by COVID. But with this big push down again, if we look back, we know that this is an area in the past where we've seen buyers stepping in approximately at 135.38. And there is two levels on top of each other. Now, we actually do have a bit of a Harry Potter drop here, only because we had a big movement in price to get us up to that level from 34.60. So I would say one thing that I'd be watching out for, let's see, let me do a horizontal array, put that there. If we have a break, if it continues to fall, and again, the U.S. really hasn't had an opportunity to react to this data yet. This data just came out, but it will be due for a reversal some point today. Because again, it's great that the pound is weak, but that also means that it's more expensive for English companies to countries from the UK to buy U.S. goods and services, which doesn't help our profits.
Doesn't help U.S. here, no.
No, not at all. And again, then with tapering and everything else, so. It's there. I would say, these are the two things I'd watch out for. We are coming to the U.S. session right now. See if there's a bounce. Again, this is a parabolic move looking for a parabolic retracement. Remember, parabolic retracements typically, they don't qualify for the reversal trade when it's a fundamental change. This was a fundamental not change. So
right.
It may take a little bit longer to kick in, but it's there. But I would say watch this. And again, if you guys know how to set alerts, if you have a price that drops below this 135.10, that's where we're there. That's where that next little racetrack area is that we were looking for a bit of movement lower. And again, what we'd be looking for is a potential short position. You guys know what the symbol is. That the lightning bolt, it drops down, goes lower, and you'd be looking for about 30 pips to the downside on that one. That's clean, although we know we have longer to go on that. But your 1 to 3 is about 10 risk, 30 gain, and we know that it goes down probably about another 20 pips below that anyway. So that would be one thing if we don't have a reversal, but it looks like it's already starting to try to reverse back again.
It keeps trying. It's tried a couple of times, but
it's the time. I mean, it's 9 o'clock. That's what's happening. That's why you're seeing it now. And then pound yen is the same exact story, right? It hit it, it bounced back up again. It's trying to push again, but it's messing around with that 154.43. So kind of the same idea, right? And again, we have a zone even below. This continues to push a little bit lower. And again, it's got to drop another 50 pips. It's probably not going to move that. At this point, a lot of this is absorbed. The U.S. trader is not really going to get in and be like, oh, the pound is dropping. We got to get in. It's not. It's the U.S. trader in general does not follow the currency market. Overseas, they could care less what happens in our indices. They only care about currencies. So there'll be profit taking and a reversal in both this as well. The pound yen is going to have some exposure on the yen side as well as for the overall Dow. So again, two different levels. The 154.43, we're kind of sitting there right now, although it's pushed a little bit deep. But the 153.76, if there is another push down, again, there could be those reversals back up again. And again, profit target should be up here around 155.25 ish for a reversal. And same thing. If you're coming up, make sure that you're getting yourself out of this one. Approximately here before the sellers really kind of stepped in and jammed us down to the ground. Your profit target to the top side would be about 136.30 on the top side. So 2 different reversals, but again, 3 days, the same exact story 3 days in a row. With not 3 days in a row, but three out of 4 days this week, we've had the same monetary policy statement and monetary kind of stance. Again,
And we knew this was coming, right?
Yeah,
We knew this was coming. We're just waiting to see how the central banks want to react and how
Right.
they are going to position. And they're clearly seeing, or choosing to see things a little differently. There's that the
Yeah.
inflation is there. No
Right.
one's denying the inflation. It is well above that 2% in England, in the UK, that it's 3.5%, I believe.
Yeah.
In the US, it's north of 4. I mean, we're
Yeah,
we're
and
we're
there was comments made about it yesterday that we know that it's hard for people. Like Powell basically is shooting himself in the foot right now, um, basically acknowledging that inflation is there. We know that it's harder for people in lower incomes to be able to justify this costs. But by next year it should kind of be back to normal. It's like, okay, you're acknowledging it, you're doing nothing, and just telling us to get over it.
so they're taking, yeah, and I
Yeah,
think, and we do get the same, sort of balance. On the other side is that they're concerned about the tight labor market,
right.
and
But
so
we just had
which
unemployment claims come in lower again, 167. It's the lowest it's been in, I think.
Yeah, so we had those, those numbers just came in. So tomorrow it'll be really interesting, and so just be on your toes tomorrow morning when we get a look at the non-farm payrolls, how many are added for that, because this is the initial jobless claims and the
Mhm,
continuing jobless claims that just came out, and then the unemployment rate. Let's see what this real story is.
mhm.
If the non-farm payroll number comes in too low, we're not adding enough jobs, and the unemployment rate starts going higher,
Yeah. March two
that could be
March
a
12th,
problem, and that would
2020.
be okay. This is what the central bank's saying. But if the if the non-farm payrolls come in and they're blowing it out and they're adding jobs, I don't know what the
Yeah, I mean,
central banks
not
are
well.
looking at.
That's the thing. ADP's numbers blew it out today. We had another, basically as low as the last time we hit this low was March 12th, 2020. So a year and a half ago, at 169 is new unemployment claims numbers. So again, tomorrow is a big day. We see the non-farm, the unemployment rate is supposed to go down. Non-farm employment change is supposed to be 300,000 above, almost 300,000 above where it was last time. Again, why the need for the weak statement? Again, I believe it's turning back into a political thing. It needs to be raised. Everybody know it needs to be raised. But if they raise it, the economy will start crashing because, again,
And no one wants, and right, the politics. Right, so interesting.
nobody wants that, especially after what we saw on Tuesday with the elections.
All right,
So
let's take a
it's
quick peek, because while we got time, let's take a quick peek over at energies. I know that oil is
yep,
moving this morning as well,
yeah,
and then we can
oil's good.
maybe
Yep.
set up for nat gas, because that inventory report comes out at in an hour and a half.
Yeah, yeah. I mean, right now you can see that kind of pushing across. Oil's had a huge move, right? Oil is up $2.60 from where the start. Really, from the European session, is up $2.83. It's over one daily ATR. Now, there's a bunch of different news out there as far as natural gas and oil. One of the ones is coming. Basically, it was a kind of a spike in the UK for natural gas because of delays from Russia shipping natural gas. So Russia, remember, made comments about helping, knowing that their inflation is there, knowing that we can kind of help out with this energy, but now they're delaying it. They're adding to it. OPEC is speaking today. If you look at here, you can see that today we have this OPEC meeting. I have not seen any headlines for it yet. With it driving forward, if you look over across on daily effects, they kind of dive into it a little bit. They're talking about how oil prices went lower, yada yada yada. It says there's decoupling. Where is it? Oh, right here. It says industry experts expect the ability of OPEC Plus to make material increases right now. OPEC said themselves they did not expect meaningful increases in production well into 2020. So they're basically saying, yeah, we'll prove 400,000 more barrels. We kind of knew that before. They're like, oh, Biden has been pressuring them, but they basically said in here that they're not going to make any meaningful increases in 2020.
Of course they're not. They don't want oil below $80 a barrel. It
Yeah,
got below 80. Oh no,
it
we're
did for
gonna.
a day. Yeah, and we talked about it getting down to 81 and even 80 yesterday. So I think I think the important thing to point out is this is. I don't know why the birds are so excited. This is more than I have to like snap at him. This is more than a daily ATR worth of movement without any really major headlines besides the fact that OPEC Plus is talking. With them pushing it higher like this, the question is if they do the increase, is this the pre-move to be able to sell it at a higher price? Is the big question. And again, it is pushing up. It is confirmed in these areas where we have had sellers in the past. So I would say that oil is also set up for a reversal. But again, a lot of this has to go back to, oh, it's so weak, it's so weak, it's so weak, and demand is low, and demand is low. And, again, OPEC's thinking is, well, if we're going to go into a recession across the globe because of all these rising
then
interest
we got to we got to keep the supply low.
we got to keep it low. We got to that's what they're thinking is it's kind of like it's like there's like five sides of this coin. We don't want to do it because we don't want to hurt people because inflation. We got to curb inflation, but inflation is being kept high because of what they see coming in the future. So it's literally it literally goes it's all about who's making money and how much money they're making. So is what it boils back. But again, 2.77%, $3 move in one session is a lot for oil. Natural gas is actually down a little bit right now, although
Isn't that interesting? And
Yeah,
and we do have those inventory report at 10:30 Eastern. So yeah, I mean,
Yeah.
look at this. Nat gas after punching higher, finally rolling back a little bit.
Yeah, it's back at that 560 point, and I would say it's kind of set up right now. If the news releases right now, I'd say it's looking like we need to go long. But with it continuing to drop, it's continuing to position itself. Drop down and look at it on the 30-minute. If we can get back into the level down here, and as much as I hate to say this, if we can get back into this 550 range, it's probably more set up for a long. And like I said, if you look at this crude oil article on Daily FX, kind of the same thing. It went significantly higher on conflicting reports about the actual delivery of Russian gas into Europe. Russia's like manipulating everything with energy. It's unbelievable. They're involved in all of
Well,
OPEC
sure.
Plus member. Yeah.
Let's be as disruptive as we can. All right, they're going to
Yeah.
get into nat gas. They're going to get into oil.
Yep.
That's kind of funny.
Yep.
All right. Well, listen, we had a lot to talk about today, and if you got any questions for Nadex, please reach out to us, customer service at nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. And really what we were talking about today, I mean, it's really about interest rates and FX. That's the markets. That's where it's hot today. It's the pound. Check that pound trade out. The pound got absolutely hammered. The Bank of England chooses not to raise interest rates. And we've got this whole backdrop. We've got this entire backdrop of inflation, all right? And we've got all these central banks concerned, and they're trying to balance out concerns about inflation. They're trying to balance out challenges around the labor market, and they're dancing a fine line. So we don't necessarily see what maybe we don't see all the data they're seeing, but we've clearly got inflation. It's clearly becoming a challenge, and we'll get a better glimpse tomorrow morning into what the employment situation in the US looks like. So we will have plenty to talk about tomorrow morning, and just tread lightly tomorrow before we go on, because there could be some moves when those numbers drop. With that, we want to thank everyone for joining us. Go out and get them. There's some volatility in the markets today. Good luck in the markets. We will catch you tomorrow.